In this episode, we're going to be talking about why Ghana's real estate market is booming, particularly the luxury real estate market. That market is receiving so much foreign direct investment. It's phenomenal. And the purpose of this discussion is to unpack the reasons why that the Ghana market is proving to become an investor's choice, particularly in the context of West Africa. In the context of West Africa, Ghana is by far leading in the area of foreign direct investment in luxury real estate, far ahead. Although Ghana is not the most populous nation, but there's a reason for that. So that we're going to unpack with this episode. Okay, so to start, the reason why we're even doing this content was a reader of our newsletter. We have a weekly newsletter called the African Market Insights that goes out every week, packed with insights and opportunities and trends across the length and breadth of the entire continent of Africa. If you like, you can if it resonates with you, you can subscribe to that. Okay, so I'm just going to share my screen here, and you're going to see. So this is the most recent episode we sent, and it was titled "Egypt's Tax Incentives Spark 7.7 billion Foreign Direct Investment in Mining." So typically, one of the users, one of our subscribers, called our attention to the opportunity sector. Let me just run through quickly so that you would know how it is like. So there's the executive summary side, then there's detailed insights where it breaks things down. I wouldn't want to go into all of it, but it breaks things down through with economic indicators. And then most importantly, this platform is all about, it's all about finding investment opportunities in Africa, basically. So the FDI section talks about investment opportunities as pertains, or news about big FDI projects as pertains to the continent of Africa. Then we have the sectoral insights. So it picks some of the key sectors, looks at what investments are going on in some of these sectors and talks about it, and briefly talks about regulatory developments, then geopolitical considerations, and then it picks a few investment opportunity to spotlight them, to highlight them, and then finally forward-looking perspectives. Then all the sources are here. You see the citations and all the sources are listed down below. So it's a very, very, very powerful newsletter. And but this content is not about newsletter at all. It's just the reason why we're doing this Ghana thing. A subscriber drew our attention to that. He's from Ghana anyway, so he drew our attention to the fact that, oh wow, this is welcoming news. Can you expand on that? I said, oh, why not? We have all the tools to do that, so let's just jump in and do it. And that's what we're going to be doing. So and I guess over time we'll be picking some of the most appealing opportunities, and we blow them up on this content on this channel. Right. Without much ado, let's jump right into the content. So Ghana is blowing up in terms of the luxury real estate sector, and I'm just going to run through some facts. When you drive around the city of Accra, I mean, I didn't know much about it until this research, or until we're doing the research for the newsletter, and it's just like, wow, okay, wow, this is exciting, this is interesting. When you drive around, you'll notice that new ultra modern facilities are springing up literally everywhere. You know, the particularly Accra and Kumasi, which is Accra is the capital, Kumasi is the second largest city. It's, ultra modern, multi-purpose use facilities everywhere. And it's It's amazing. It's actually beautifying the skyline of Accra and Kumasi. And this is the reason why. So the first point is Ghana's the property market is seeing an annual price increase or appreciation rate over the past decade or the past 10 years. It's been steadily seeing growth rate of 5 to 7% in growth in terms of property appreciation, in terms of pricing. So you bought a property for $100,000 in a year, it appreciates by 5 to 7%, which is amazing, right? So that is, and that has continued for at least 10 years. And it is not showing any sign of cooling off. If anything at all, the sign is that it's actually even growing more and more steadily, right? There are pros and cons for that, but I would prefer growth more than decline, right? Then as we're doing the research, realize that okay, foreign direct investment within the sector, particularly, I think one that we have real data for is 2020. In 2020 alone, there was $260 million in foreign direct investment, which is money coming outside of Ghana, pouring into the real estate sector. And that was 2020. By this time, it should be probably at least double this amount, right? So that is that. And all these, to capsulate it, to me, there are three basic factors that is accounting for this. The first one is that, or it's like a conglomeration of three factors, or putting together of these three major factors causing the real estate market in Ghana to blow up. One is political stability. Ghana has been a stable country. Thanks be to God. Ghana has been a unique beacon of stability, particularly in Africa as a whole, but particularly within the West Africa sub-region. Ghana is a flagship country. And it's not any fluke. Ghana has seen multi-party stable democracy for at least 25 years. Ghana has a very mature democracy, and that because of that, investors see Ghana as as a place with less political risk. There's no mayhem and coups and political chaos, as unfortunately happens in some countries, but in Ghana, it's stable and has been stable for at least the past 25 years. The second factor, and we're gonna go deeper into these kind of factors. The second factor is demographic shift. And demographic shift in this case, I would call it urbanization or rapid urbanization. A lot of people in Ghana are moving from the rural areas into the urban centers. And the rate at which people are moving is crazy. To use it, to coin it, I don't even know how to coin it, is massive. It's a lot of rural urban migration. I know, you may have a lot of people who see the negative side of it. Others will see the positive side of it. Today's discussion is probably it's not about that. But I'm just laying out the groundwork so that if you're a potential investor, can see what is going on in Ghana and you want to be a part of it. That would be great for you, your firm, or your entity. Then the next one is Ghana has gone through a lot of positive economic reforms, and those reforms are gradually beginning to pay off. Or if they've not even started paying off in big time already, they are paying off. So we're going to peel this back, right, and look at the major factors that are causing this rush or influx of foreign direct investment in Ghana. Hey, I'm super grateful you are watching this video. I've got a quick message to share with you. Very quick message. And that is, after interviewing well over 200 multinationals and investors who predominantly do business in Africa, one thing is very, very clear. Businesses, and particularly foreign direct investments in Africa fail all the time, literally every day. And it's not because of the usual lack of funding and lack of human capital that you think of. It's because of something very important that is often overlooked, and that is cultural mistakes. Lots of companies make cultural mistakes when doing business in Africa. They offend local partners with cultural blunders. Their perfectly good products or services sit unsold. Why? Because they missed basic cultural cues. And also, expansion plans collapse when what worked in one country backfires in another country. And the harsh reality is this: most companies lose years and millions of dollars on preventable cultural mistakes. So what if you could see the cultural patterns successful businesses use to navigate these challenges? Our free report called The African Advantage reveals the regional cultural intelligence that can save you from these costly mistakes. For instance, did you know that there are 5 distinct cultural clusters or regions when it comes to doing business in Africa? Not knowing this could prove fatal for your venture. For this reason, I'd like you to avoid these costly cultural mistakes by downloading the African Advantage report free of charge by clicking the link in the description or comment section below. Don't let cultural blind spots become business disasters for you. Now let's jump right back into our video. So the first one is the economic driver. So I put that here. Let me bring my mouse here. So it's the economic drivers, and the economic drivers are very simply. Let's take it one at a time. They are economic, I would say, things that the government has done that is causing the economy to grow. So one of the indicators is GDP growth. So GDP growth, if all those acronyms scare you, don't worry about it. GDP growth is very simple. How the country's output, right, in terms of income, if you are looking at it from your own personal perspective. So if you are a family of, let's say, 5, and their family's income, it's say $50,000 in a year, or let's use 100,000. So $100,000, a family of 5, and after 1 year, the income of the family now grows to 110,000. That means that the family's income has grown by 10% because there was an extra 10,000 on top of the 100,000. So it's appreciated by 10%. It's the same for nations. Nations, we, instead of calling it income, we'll call them output, or what do you call it? Receipts from their output, right? So they export things, they export goods, services, and diverse royalties from minerals, blah blah blah. So the income that comes from the country's output, in loose terms, is the GDP growth, right? So in Ghana and in Africa, when you see a country's GDP of more than 5%, it means that growth is solid. That is very, very good. GDP growth rate of more than 5% for any sub-Saharan African country is wonderful. So in 2024, Ghana's GDP growth rate was 5.7%. And it's even projected that at the end of 2025, it's going to increase to 6.5%. That is wonderful news. This is what investors like, an economy that is growing. And GDP growth rate means that the economy is growing. If it shrinks, then it means the economy is contracting, which is not good news, right? Then on top of all this big macroeconomic thing, GDP and all those things, there's also pragmatic measures. So one of them is a policy that was introduced by the Ghana Investment Promotion Center, or I don't know, at GIPC. That's what I think the acronym is. If I'm in error, somebody should put it in the comment. GIPC, Ghana Investment Promotion, whether it's center or commission, whatever it is. So they came up with a policy that says that any real estate projects that are over 50 million US dollars, there's a tax holiday. So they introduce a tax holiday for those projects. I think it's up to 10 years, if I'm not mistaken. So that's a huge thing. Then on top of that, the building materials that are purchased, or in this case, the construction materials for those kind of projects to are VAT exempt, so they don't pay VAT on those things. These things could change though, but I'm just highlighting some of the perks that is causing the industry to explode. These are some of the perks in Ghana. Okay, so the next one, which is a big thing, is urbanization, as I alluded to earlier on. So Ghana's urban population is growing. So it's a country of like 34 million people. And as of 2024, 18.4 million people were living in the urban centers. And that is huge. And on top of that, that is causing an annual housing demand, an uptick in annual housing demand in every place. And in this case, in a place like Kumasi, which is rapidly urbanized. I mean, the Kumasi is growing leaps and bounds. You're seeing an 8% in annual housing demand, 8% increase in annual. That is every year, 8% more demand housing in Kumasi. Accra would be far higher than that. Right. Then a place like Accra, there's a place called Airport City, very close to the airport. There's a lot of commercial development going on there. And for that, there's a 12% commercial space absorption rate in Airport City alone. That tells you how fast the property market is growing in Accra and in Kumasi as well. So last year, 2024, there were 2,000 units of, 2,000 units, housing units added to the pool in Accra alone. But it pales in comparison with the demand, because the approximate housing deficit in Ghana has been about 2 million houses. That's the deficit. So 2,000 houses in Accra is a drop in the ocean. There's constant demand. Why? Because of the rapid urbanization. And also, one thing I would just mention, because of the political stability and economic stability of Ghana, there has been an influx, a major influx of migration of people from the sub-region. So people from Nigeria, Niger, Liberia, Sierra Leone, and surrounding countries. There are a lot of them that have migrated or migrating at rapid speed in Ghana. And that has its advantages and its disadvantages, as I would mention shortly. But that is also putting pressure on the already on the housing deficit that is already there. So that's and it's putting pressure on commercial side and on the residential side as well. So that is one of the reasons why. And as I talked about migration, we see that migration, as the number of people who are moving from the rural centers to the urban centers, is growing year on year, about 3.5% annually, as you can see over here. Let me just So if I were to draw around it, yes, it's about 3%, 3.5% annually, right? Then for investors, this will be good news to you. The rental yield for luxury real estate in Ghana, particularly Accra, is between 10 to 13.5%, which is huge. I don't know. You can get that kind of rental yield in Europe. Yet that I don't know. Possibly I don't know about North America, but it depends on the state. Certain states you may be able to get that kind of rental yield, but on average you wouldn't get that. Probably 5-6%. But here you're looking at 10 to 13.5%. That is huge, right? Okay, so then the next one is who are the key players that are pouring money into Ghana's luxury real estate sector? The first country is United Kingdom. You'll be amazed. And why? United Kingdom, because there's that kind of affinity because of the colonial past and that kind of thing. So it's like I think for British people or let me put it that way, there's that kind of natural affinity for places like Ghana that are like part of the Commonwealth when they look at places to put their money. Although that is not the real factor. That's just the icing on the cake. And it also means that the numbers look right to them. So there's been a lot of injection. I think last in 2024 alone, the amount of bilateral or trade between Ghana and UK alone brought in about 1.9 billion pounds into Ghana. That's the quantum of foreign direct investment, particularly with more emphasis in the luxury real estate sector. So by far, UK leads in terms of foreign direct investment into Ghana, and closely followed by China. China initially started its foray into Ghana into the extractive industries and all that, but has recently begun to morph into providing what do you call it, a real estate. I would say putting up real estate assets in Ghana, and they are doing a lot of public-private partnership thing with the government, with the ports, and all those kind of things. That's mind-boggling because the opportunity is huge. Then there are other. I would say the UK. There are projects like the Marina Mall project. They are doing one in Takoradi now, and it's a UK project. Yeah, the funding came from the UK. And then there are others from South Africa as well. There are a lot of South African investors who have caught the wind of the luxury real estate sector in Ghana, and they are jumping at it. And there's also, Nigeria. There's a lot of money in Nigeria, and a lot of wealthy people in Nigeria have second homes in Ghana too, right? So naturally, Nigerians are also seeing opportunity on the Ghana real estate market, and it's blowing very, very hot. So in all these things, obviously everything is looking good, but definitely, like any human institution or any human endeavor, there's bound to be challenges, and the challenges are also heavy. There are two major challenges that impacts the real estate market. So I will look at the challenges here. The first one is the infrastructure deficit. Yes, think about it. The rural folk are migrating to the urban centers. So everything that infrastructure wise in the urban center is going to experience pressure. So the road networks. So Accra is not fun to drive around because there's so much traffic. Why? Because the infrastructure required to accommodate the new influx of people is not there. In Ghana's I would say, in Ghana's insight into Ghana's infrastructure deficit is amplified by the fact that there's even right now more than $1.3 billion in road sector arrears. That's arrears that government owes existing contractors, and the government is struggling to manage its debt. It has a lot of debt, all these IMF debt and many other debts that they borrowed. That those debts are due. They are competing for space. You are servicing the debt. The money that you could have used to service the debt, you could have used to build infrastructure. So that same money, that small money that the government has, is being used extensively to service debt. Therefore, the government cannot have surplus money lying around to just build new roads or bridges, right? But government still needs to go out to borrow again. And the more they go out to borrow again, the more indebted the nation becomes. And the more it can impact the country's credit rating. That means that your cost to borrow new money goes higher. So it's like it's like a chain. I mean, it's like a chain or a cyclical chain. You are bound each way. So that is a major thing. Infrastructure deficit is there. You can see it. Although they are trying, but it is there. Road networks, bridges, public services. There are no parks that you can take your kids. All those kind of things. There are things that would really help. Health institutions, right? That schools and the rest. So a lot of infrastructure deficit that because population is just bumping up in the urban centers. So that's a major thing. Then the next one is energy sector liabilities. Yes, there's also debt in the energy sector. So the government owes a lot more, a lot of the power generating companies. And I think the last time I checked, the independent power generation companies are owed to the tune of like $1.5 billion. So this same money that is being used to service debt, they need to figure out some ways and means to create new infrastructure. At the same time, they need to also figure out to service energy sector. So in terms of electricity, in terms of the constancy of electricity in Ghana, it's not bad at all. In the West African sub, Ghana is probably one of the best in terms of the number of days you have the lights on or the number of hours you have the lights on. Ghana has gone through a bad period in the past before. And now electricity is pretty stable. But with it, even with that, there's this odd, this day here, that power will just cut out. So most of these new developers, what they are doing is they are creating their own kind of power systems, that backup power systems, extensive solar power and battery systems that are backup, so that their residents or the people that own those kind of nice condos, nice apartments will always enjoy constant electricity. So that comes as extra cost within the construction or within the building up of the real estate asset. It comes as an extra cost. If power was that stable, there wouldn't be that need to fall back on alternative sources of power. And that's what, so many of the big high rise that are going on, they are also building their own parallel power systems. So that is something to know. And that also presents opportunities for companies in that space who would want to also sell those kind of alternative power systems to the construction industry, to the big real estate players. So I'm all for finding investment opportunities on the continent to take advantage of. So then the final one, we're going to look at comparative analysis. So let's look at comparative analysis in the region. So we're talking about Ghana. Ghana is by far not the largest, but they are receiving Ghana is receiving massive influx of foreign direct investment, all because of the things that I've just enumerated, right? Anyway, I just remember this. If you haven't subscribed to this channel yet, and this type of content resonates with you, I would encourage you to subscribe and click on notification bell so that anytime I create content like this, you would receive it. And it also helps with the algorithm so that it encourages me to do more of such content. All right, that's just by the side. So let's get back in there. So when you look at it from a comparative analysis standpoint, Ghana per capita, right? Foreign direct investment per capita. What it means is the amount of inflows, investment inflows that comes into Ghana. When we divide it by the entire 34 million people in Ghana, each person will get $43.20. So let's break it down. So let's say $1 billion comes in as foreign direct investment inflows. So that $1 billion, for comparison purposes, say, okay, let's divide the $1 billion by the number of people or by the population size in Ghana. That's where you get the per capita from. So the per capita, the foreign direct investment per capita in Ghana is over $43. This is in 2024, right? So as you can see here, so this is it, 2024. The same number for Nigeria, which is a bigger market with 230 million people, the same FDI number per capita in Nigeria is $9.80. So that should just tell you the quantum of the inflows into Ghana as we speak, right? So it's huge. So that's just to give you context. I'm not dissing my Niger brothers. I'm just rehashing the fact. This is a fact. That is so Nigeria is $9.80 in terms of inflows, right? And another hot market is Abidjan, which is in Ivory Coast or uh, Cote d'Ivoire, right? Cote d'Ivoire. They It also has a growing luxury real estate market. Um, Even the price growth, and I didn't talk too much about price growth in Ghana. So price growth in terms of property prices appreciating year on year in Ivory Coast is higher than Ghana, a little bit, marginally higher, right? Even then, Ghana still wins. Why? Because unlike Ivory Coast or Abidjan is the capital of Ivory Coast. Unlike Abidjan, where most of the tenants for these ultra high-end properties are French corporate clients. They are from France. So maybe Total or any of the Renault, Nissan, any of these French companies, right? What's the other one? The company that um, competes with Boeing. There's French. The French, they have so many big companies. So these companies, when they do business in Ivory Coast, they rent these spaces for their employees. So the Ivorian market or the Abidjan market is typically heavily skewed towards this kind of renter base. That renter base is French corporate tenants. Whereas in Accra, it's very diversified. So the thing is, if something happens and all of a sudden French nationals are asked to leave Ivory Coast right now, the real estate market is going to suffer, or the owners of those kind of properties are going to go through a difficulty. Or if something were to happen in Ivory Coast, like did in Burkina Faso, and they say, hey, I don't want any French, all the French out. That is going to impact their market. So that makes the real estate market in Abidjan quite riskier. Whereas in Accra, it's broad. Everybody, everywhere. People are coming from the diaspora. They're everywhere. And markets like, there are places like in Accra, like East Legon and the cantonments, where I would say the appreciation of property values is like 15% per year. Is so huge. And I believe that Ghana has got a fundamental right, and I hope it stays like that for the foreseeable future. So now that we've talked extensively about the data points in Ghana's property market, let's look at some of the qualitative measures when it comes to evaluating the real estate industries, particularly luxury real estate in Ghana. And to help us do that, let's jump on to use our own AfricaInsights.ai platform, right? So we're going to jump in. Basically, we're going to analyze that sector for Ghana, and the tool is the Market Insights tool. So the first thing that we do is we select the country. So the country, Ghana. So we select that, and then we choose the industry, which is real estate. So we choose that. Okay. And then we click on the generate analysis button. Then it gives us the meat of it. So we're just gonna pick a few bits and pieces to see what the report says. Right. This is there's a report. What I normally want to start with is typically the sector performance score. This index shows how that sector for that country is set up in terms of opportunity, right? So in terms of how appealing that sector is for external or internal investors. So a higher score represents that sector is really a great opportunity, and a lower score indicates opposite, right? So in this case, the sector performance score was 77%, which says it's solid opportunity. Solid opportunity. I see it's dropped a little bit. This report changes every now and then. The last month when I looked at it, it was like 80%, and a little bit has shaved off of it. But even with that said, it's still within the range of solid opportunity. So let's see what the rationale, the score rationale is. And that's always where I want to start from. So it says Ghana real estate market presents a solid opportunity with a projected market value of around 533 billion US dollars by 2025, and significant growth potential driven by urbanization. We talked about urbanization, right? So it's driven by urbanization and economic expansion, right? And in this case, it's talking about the GDP growth rate expansion. So we are on track. So the market size opportunity is boosted by increasing foreign investment. That's the FDI, foreign direct investment from the UK, China, South Africa, Nigeria, and even India as well. So the market size is boosted by increasing foreign investment and demand for luxury properties. That's what we're talking about. The sector is blowing hot for luxury real estate. Okay, so what our assumption is being corroborated, right? However, high interest rates and regulatory hurdles present challenges. The growth dynamics are strong, right? Because say every year it's been growing year on year, 5 to 7%. So its growth dynamics are strong, supported by projected GDP growth rate of 6.5% and rising property prices. It couldn't have gotten any better. The investment climate is promising. Frankly, we have an investment climate report here. When you run it, you realize that Ghana is one of those countries with great, it's not the highest up there, but it's amongst the ones that are good investment climate. So the investment climate is promising, with government support for urban development and efforts to improve regulatory efficiency through infrastructure deficit, though infrastructure deficits remain a concern. That's what we talked about. There's concern for infrastructure deficit, and then also in the power generation sector, the energy sector as well. There's a lot of debt there that the government needs to mop up or put its act together to clear. And that would be a high flyer. That probably would take Ghana to like 87, 89% in terms of opportunity score. So basically, the report is extensive. It talks about competitive landscape, regulatory environment, opportunities, challenges, and trends. But I just wanted to just give us a feel of, so that you know that we are not just picking things from anywhere. It's a phenomenal thing. So without much ado, thanks so much for watching. And once again, if you haven't subscribed, do well to subscribe. We will bring you only quality things, and it also helps with the algorithm so that quality content like this gets shown to more people. Thank you for hearing me out, and I look forward to seeing you again in the next video. If any of this resonates, you put your comment. If you have any ideas or if there's something I omitted, kindly put it in the comment section. I'll be more than happy to respond.